Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, March the 14th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on. All right, so I missed a couple of days, was on vacation, drove up to Utah, went through a couple of national parks, Bryce Canyon, Zion, really pretty cool. Highly recommend that if you ever have that opportunity. And then drove back yesterday, 10 hours, almost 11 hours by the time we got said and done. And I'm back in the saddle again. All right, so let's get it on without further ado. Got a lot of economic data to kind of go over because I missed a couple of days and some trades I put on today. So yesterday we didn't get really a whole lot, but we did get CPI, which is Consumer Price Index, month over month, came in at 0.2%, expected to be 0.2%. And then core CPI, which strips out some of the more volatile aspects of that number, came in line with expectations at 0.2% as well. Both of those are numbers that the Fed is going to be looking at in order to raise interest rates. They want to see prices increase. That's inflation. That means that their mandate of increasing interest rates is intact. Well, we're not really seeing a lot of raising of inflation. So, that could be a little kink in that fourth interest rate raise that they've been talking about. We know about 3. We've talked, even I said, I think they might be doing 4. But now that we're starting to see some of these economic numbers hold off a little bit, it may not be the time to have 4 interest rate raises. We might be down to 2 now. We're going to have to keep those data points in line and keep all of them in our heads so that we can kind of discern what the Fed is thinking as well. All right, then here in the United States, or actually let's look across the pond today. We got Italian sales came in at negative 0.5%, was expected to be a negative 0.1%, and then they revised last month's number down from 0.3% to negative 0.3% to negative 0.9%. So retail sales in Italy not doing too well. I guess those riots that they're having are not boding well for the shop owner, I guess. All right, European industrial production came in at negative 1%, was expected to be a negative 0.4%, so worse than expected there. Now back here in the United States, again, we've got core retail sales came in at 0.2%, expected to be 0.4%, but they did revise last month's number up from to plus 0.1%. Then PPI, which is Producer Price Index, came in slightly higher at 0.2%, expected to be 0.1%. Finally, retail sales came in at negative 1% or negative 0.1%, expected to be a positive 0.3%. They did revise last month's number up from a negative 0.3% to a negative 0.1%. So really those numbers kind of make a wash for one another. Core PPI came in at 0.2%. Business inventories in line with expectations at 0.6%. Crude oil inventories, we got a rise of 5 million barrels, expected to be a rise of 2.2 million barrels. Now, one thing with that number, we're seeing the rise in inventories. We're producing a lot, don't get me wrong, but what we were seeing is crude oil inventory is drawing down, remember, but they were sticking it in another bucket, which we were calling the gasoline bucket and the distillate bucket. Well, we're seeing a drawdown in those 2 buckets now and the build in crude oil inventories. Why is that? Well, here's the theory that I've got going. We've been talking about these oil producers, or not the producers, but the oil manufacturers, the guys that convert the crude oil into other byproducts, the distillers, and those guys are doing annual maintenance, so they're starting to shut down a lot of those plants, which means that they aren't producing the byproducts of oil. So we're seeing now that oil inventory rise while we're seeing the other ones kind of draw down because we're not converting. I know I did a lot of driving this week, so I helped get some of that gas drawdown going for you guys. All right. But having said that, big crude oil build causing weakness in crude oil today, as we can see here with the chart on crude oil futures. Down slightly though, but off of the lows of the day, you can see we're made off of that inventory number. We came down, slammed right down to that 60 mark that I've been talking about even last week, that was acting as major support. They're really defending that 60 handle, continuing to do that this week as well and today. That is a major line of support for the bulls. So bears really got their work cut out for them to break below that, to even test that 38 Fibonacci level. So bulls really digging their heels into the ground around that $60 a barrel mark. On to gold futures, they're off slightly as well, but again, finding a lot of support on this 78 Fibonacci level. One could even say they're defending the value area high right here, building up this node here. So it's getting real comfortable right here at 1320, just above the 1300 handle. Going to be defending that. Inflation not really showing up today. That's also going to cause weakness in gold as well. All right, we've got Bitcoin futures cannot stay above that 10,000 mark. We said that was going to be the line in the sand where they were going to kind of try to defend that. Once we got below that 10,000 mark, we have not really been able to get up there to test it at all this week after last week's sell-off. I thought this was looking like a little bit of a bottom, but never got confirmed really. It's just a pretty messy downward spiral for Bitcoin. There's a lot of things going on. I think something I read about Google was not going to allow ICO, which is the initial coin offering, kind of like an IPO, but they're raising money through their own cryptocurrencies instead of going to the market and raising it with other investors that way. Google said they are not going to allow people to advertise that way. So a lot of these cryptos are still seeing a little bit of weakness due to some of that rhetoric going on with the SEC. Now Google talking about not allowing advertising, things of that nature, really not going well for the cryptos right now. All right, VIX moving slightly higher, still in the double digits, in above 15, which is where I'd like to see it, above 15 anytime for that matter. But as you can see, we are slightly higher, and that's due to the fact that we're seeing some weakness in the overall equities again today. It's 3 days in a row now we're seeing weakness here in the Dow Jones, down to another 250 points, coming down to test this trend channel that I kind of built up around this little new move here. So I was looking for it to bounce, start to kind of trend back up. So far, so good. We wanted to stay above this trend channel in order to kind of continue that momentum for the bulls anyway. NASDAQ still in negative territory, albeit just slightly down 8 points after yesterday's sell-off, making that look like a confirmation, finding support on my trend channel line here that we've had built up for almost a year now, feels like anyway. But this acting as support, as you can see, once we busted above that then becomes support and trying to hold above that trend channel. Now, that has held through today, but we're going to have to keep our eyes on that, because to me, this is looking a little bit bearish right now. All right, on to the mini S&Ps, another similar situation where on Monday it looked like a bit of a top. Yesterday got confirmation. Today continuing down, but we are finding support. Everything's lining up with the 9-day, the 50-day, and the 23 Fibonacci level. So all of these things are still going to act as support for the E-mini S&Ps. So they've got a lot going for them as support. If you are a bull, there's a lot of reasons to be able to keep your powder dry, if nothing else. Overnight inventory got really long, as we can see here. Stayed long into the open. We flushed them out, slammed down to the bottom, and are starting to try and recover. Now remember, it was 7:30 was the open. Now it's 6:30 because I'm in Arizona, and they do not open the market. So 6:30 is the open. As you can see, overnight inventory getting flushed out there. All right, let's get on to a few things that I've done quickly so I don't run you guys too long on my first day back. All right, so a couple of things going on in my IRA and in my margin account with Procter & Gamble. Let's just start out with the IRA right now. I went in and sold the April showers, sold the 75 puts, defined it by buying the 60 puts, and did that for 41 cents. Now, obviously, that's not a defined risk strategy. I would say take that risk to the 60s in Procter & Gamble. I'm only looking to get just below this. I think we're going to find some support here where we are currently. As you can see, they bounced off that a couple of times. This is going to act the 78 handle, major support. It's starting to kind of peel over, but I think it's just a little bit overdone. We start seeing some tech sector weakness. I think people are going to run to the staples of like Procter & Gamble, Kellogg, and things of that nature, where we have to buy something from them almost every day. Those people are going to be able to weather out any other market correction, especially when tech starts going. They're going to push their money into something like this. That's what I'm looking for if there is a correction. Plus, I think it's just way overdone to the downside. Got below that. So in my IRA, somewhat of a defined risk, but that's just kind of skirt the margin requirements in an IRA by defining that risk. Now, if we look over at my IRA, from my IRA to my margin account, I wasn't worried about that defined risk necessarily. So I went in to the April, sold just the 75 puts for 46 cents in there, but looking for it to stay above that 78 handle. If it starts breaking below that, that's probably where I'm going to be out. I usually wait for it to test my strike, my puts, but now that I'm looking at that technical setup, I'm going to probably be, or I am going to be looking to get out if that 77.8 print gets bettered to the downside. I'll be pulling the ripcord. Similar situation with Intel, looking to play this to the downside. Went into the April, sold the 55 calls in there for 62 cents. Again, I'm probably not going to wait for my 55s to get tested because I'm doing this on a technical setup. This creating a nice top here, looking to get confirmed today. I would like to settle below this wick here. Don't know if that's going to happen. I put that trade on when it was trading down there. So I'm usually a little bit early, so playing that to the downside. But if we trade up and above that 74, into the 74 handle, I'm going to be out of that one as well. On to Boeing. Boeing's had a nice big run. It's starting to consolidate a little bit in the last couple of months. You know, you could say this is somewhat of consolidation. And when you start getting the jukes back and forth like we've gotten, starting to settle down a little bit. I think we're going to see some support here right around this 320 mark. So I was able to get below that the 320. If it starts breaking below here, it's going to be a little bit more bearish. So it looked like it was going to do that a little bit earlier today. But adding some short deltas to my overall portfolio, I went into Boeing and sold the 375 calls in there for $1.23. So again, above this mark here, we can see we tried to juke back and forth, broke up there once, tried to test it again. It's just not happening. This is going to act as support, but I think that we're going to start seeing this settle down just a little bit more. Very choppy pattern on the volume profile. As you can see here, it's all over the place, not really giving us any discernible action really where the market has found value. It looks like there's a lot of places where market thinks it's finding value here. So, but I do think that we're going to settle down or maybe even roll over here in Boeing, which is why I'm playing that to the downside. All right, that's it for today. I hope you guys all made it without me for a couple days. Friday's webinar, I wasn't sure I was going to be back in time for that webinar. We kind of had some family that we needed to visit up in Utah, which is why I took that last minute trip, and I didn't know how long it was going to last. So everything is pretty good now. So I'm back in the saddle again, but we don't have a webinar scheduled for Friday as of right now. All right. So that's about it. If you can't take that, take it easy.